There's a phrase circulating across economic circles, financial newsrooms, and government institutions: the coming reset. It's vague, unsettling, and often misunderstood. But make no mistake, behind the headlines, behind the calm surface of everyday life, a slow but powerful economic shift is underway. A shift that will affect how you earn, how you spend, how you invest, and how you build your future in ways far deeper than most people realize. For some, this reset will be painful. For others, it will be the greatest opportunity of their lifetime. Today, we're cutting through the noise and diving straight into what this slowdown actually means, what's really changing, what's coming next, and how you can prepare before everyone else wakes up to the new reality. Welcome to Mind Over Markets, where clarity meets a changing economy. When people hear the word reset, they imagine dramatic collapse: banks failing, markets crashing, governments losing control. But the kind of reset forming today isn't explosive, it's structural, slow moving, foundational, and that actually makes it more dangerous because it's easy to ignore until it's too late. Here's what reset really means in 2025. The economy we grew up with no longer exists. Cheap housing, cheap credit, guaranteed growth year after year, all gone. Many people still expect the old world to return, but it won't. Governments can no longer stimulate growth like they used to. Debt is too high, rates are too high, and the tools they relied on after 2008 are losing power. People buy less, save less, live paycheck to paycheck more than ever before. This changes entire industries. Wealth is consolidating in fewer hands, but at the same time, entirely new doors are opening for those who know where to look. This reset is not a crash, it's a transformation. And every transformation creates winners and losers. But to understand why the reset is happening, we need to go deeper into the economic engine slowing beneath our feet. Most news outlets blame inflation, politics, or central banks for the economic slowdown. But these are just symptoms. The patience of the global economy has been running out for years. The reset is the result of five major forces that have been converging for over a decade. 1. Aging populations. Countries like the US, China, Japan, and nearly all of Europe are aging rapidly. This means fewer workers, more retirees, and more economic dependency. This also means lower productivity, lower tax revenue, lower long-term growth, and higher government costs. This drags on the economy like invisible gravity. 2. Decades of debt. Governments, corporations, and households borrowed money for 20 years as if interest rates would never rise again. Now that rates are high, debt has become more expensive. Payment rates have increased, budgets are tightened, and growth is slow. This is why consumers feel stretched, even when wages are rising. 3. The end of ultra-low interest rates. From 2008 to 2021, money was basically free. People borrowed, businesses borrowed, governments borrowed, investors borrowed. But now, that era is over, and the shockwaves are only beginning. 4. Geopolitical fragmentation. The US-China rivalry, wars in multiple regions, supply chain resets, and energy conflicts all add friction to global trade. Friction equals higher costs equals slower growth. 5. Technology. Disruption. AI and automation are transforming the job market faster than economies can adapt. Some industries are growing rapidly, others are dying quietly. Most workers don't realize they're standing on fragile ground. Every major economic transformation has a moment where the underlying slow shift becomes visible. For today's economy, 2025 is that moment. Why? Interest rates will remain higher for longer. Central banks have accepted slower growth as the new normal. Lowering rates risks inflation returning. So the economy is stuck in second gear. Consumers are running out of money. Savings are at 17-year lows. Credit card debt is at an all-time high. Auto loan delinquencies are rising. People are borrowing today to survive yesterday. Governments are out of room. Stimulus worked in 2008. It worked in 2020. But now government debt is so high that massive spending becomes dangerous. Productivity is collapsing. This is one of the quietest indicators. Productivity is the fuel of economic expansion, and right now, that fuel tank is nearly empty. 2025 is when these pressures converge, not as a sudden crash, but as the realization that the world is not slowing down temporarily, it is resetting permanently. Politicians and media love the phrase soft landing. It suggests that economic pain will be gentle, controlled, and temporary. But here's the truth: there is no soft landing when the plane was never meant to fly this long on cheap fuel. A soft landing assumes growth will rebound quickly, consumer spending will remain strong, wages will outpace inflation, debt levels will stabilize, and businesses will continue hiring. But none of these conditions exist. Instead, we are facing slower economic growth, higher borrowing costs, more cautious consumers, corporate layoffs, rising debt defaults, and stagnant real wages. This is not a landing, it's a reset of the flight plan. But the slowdown does not affect everyone equally. In fact, the divide is widening. Here are three groups are at the highest risk. 1. The overleveraged. This is anyone with high credit card balances, large variable rate loans, expensive mortgages, and rapidly increasing bills. The slowdown exposes them first. 2. The underskilled. Those relying on outdated jobs, declining industries, low wage work, and jobs vulnerable to automation. AI and automation do not slow down when the economy does, they accelerate. 3. The unprepared middle class. The group that will feel the reset the most is the one that has been stretched thin for 15 years. They believed that the stock market always goes up, housing always appreciates, debt is manageable, that wages will catch up, and that retirement is guaranteed. Those assumptions break during resets. But despite the challenges, resets always create new winners. Here's who stands to gain the most. 1. Savers and cash holders. Finally, after decades of zero interest, cash has power again. High interest savings, treasury bills, money market funds, and stable yield instruments. These become leverage points for opportunity. 2. The skill adaptable. These are people who pivot fast into AI assisted skills, data driven roles, digital income streams, remote work specialization, and technical and analytical fields. These individuals leapfrog ahead while others fall behind. 3. Long term investors. When valuations fall, when fear rises, when markets slow, this is where generational wealth is built. The reset makes stocks cheaper, real estate more reasonable, assets more accessible, and opportunities more abundant. Every major investor fortune was built in times like these. You cannot use the old playbook in a new economy. What worked from 2008 to 2021 will not work in 2025 and beyond. Here are the new rules of wealth for the era of reset. Rule 1. Cash flow is more important than net worth. If your income is unstable, your future is unstable, no matter how many assets you hold. Rule 2. Avoid high interest debt at all costs. Nothing destroys wealth faster in a high rate environment. Rule 3. Prioritize skills over credentials. Degrees don't guarantee income, skills do, especially data, AI, financial, communication, as well as technical and digital skills. Rule 4. Buy assets in times of fear, not in times of hype. The media will say, avoid the market. The wealthy will quietly accumulate. Rule 5. Protect your time as much as you protect your money. The biggest cost in a slowdown is wasted time, not lost income. Rule 6. Think globally, act locally. Diversify income, diversify markets, diversify currency exposure. This reset is global. Your opportunities should be too. Rule 7. Understand that resets reward patience, not panic. Markets reward the prepared, not the emotional. Let's break down a concrete plan you can execute right now, no matter your income, location, or starting point. Step 1. Audit your finances. What debts do you have? What subscriptions drain money? What expenses can be reduced? How much emergency savings do you have? Awareness is power. Step 2. Build a stable financial base. Focus on emergency fund, cash reserves, high savings rates, and low risk yield. In a slowdown, stability is the first step toward opportunity. Step 3. Strengthen your skills. You should be learning at least one income boosting skill right now. Not next year, not when things get worse. Now. Step 4. Create multiple income streams. You don't need 10, you need 2 or 3 strong ones. The new economy rewards creators, analysts, freelancers, tech enabled workers, investors, and digital entrepreneurs. Step 5. Position yourself for opportunity. When markets cool, new chances appears in the form of affordable stocks, cheaper real estate, new business openings, innovation waves, etc. The reset creates fresh soil for new growth. The coming reset is not an end, it's an inflection point, a structural turning of the economic wheel. Some will experience it as a crisis, others will experience it as the moment everything changed for the better. The economy is slowing, but opportunities are expanding for those who can see what others overlook. This isn't about fear, it's about clarity. You now understand what this slowdown really means, what's at stake, and most importantly, how to position yourself to not just survive the reset, but to rise because of it. Stay focused, stay informed, and stay ahead.